Let's make sure we are coming in clear. We can see what you're typing, Peter. Yeah, definitely a beanie today. It's a little chilly this morning. All right, so good morning, everybody. Welcome to FOMC Day. So it's obviously Wednesday, September 21st, 2022. A day that should be high impact for the market. We've been kind of preparing for this eventual day, probably over the past couple of weeks. Market certainly has in regards to Jackson Hole and CPI readings, and now we are live into that particular event. So we will go into this like we do other analyses, and we'll talk about maybe the short-term opportunity along with some of our weekly ranges to pay attention to. As far as the S&P is concerned, we have plenty of room to move. And I say this more from the perspective of the weekly expected move. The market really hasn't gone anywhere over the past couple days. You'll actually notice that yesterday we tagged Friday's close, and that actually marked a pretty significant relative high on the intraday session. So from the market's perspective, we're not really going up, but some price activity kind of remains on Friday's close. Hence, we're calling this a relatively flat week so far. Certainly some trade opportunity in between, but nothing really moving the S&Ps. When it comes to our expected move this week, we are still expecting about 116.81 expected move. And if you need the levels for that, it's a 39.90 upside and then 37.57 downside. Now, that's for the week. What about today? And I think this is something that you could do for any binary style catalyst coming into the market. You want to know, how is the market preparing for that in the option chain, along with the volatility that's being priced in, and where would some of the high open interest be if that binary event were to, force some sort of move. When it comes to the SPX, we can look at the 21 September series. So that's today's expiration. We want to kind of anchor to yesterday's close because the option market is closed right now. You shouldn't be seeing too much in the way of adjustment of these values. And it's all based around the settlement price. So what did the market close on yesterday? About 38.55 SPX. And that's going to be our sort of at the money range. Where in this option chain is some of the higher open interest? Where is some of the risk of this particular chain? First things first, your whole dollar numbers, your 3,800 has fairly high OI to the downside, and then your 3,900 top side. Because we're at 38.55, we're pretty much in the middle of those two psychological regions. So, there's no real clear edge as to which one's going to be hit. We could also look at the expected move. And that's where we're saying, okay, does this particular option chain dictate that today we can move, let's say, 50 SPX points? Because if we are at 385 and we're trying to get to 39 or 3,800, you need at least about a 50-point expected move. You need that IV to kind of reflect that. Right now, it's priced at about 65. So we do have the capacity to move that range. We can actually move a bit further. If we're looking at exacts, we'd probably say about 37.85 and then 39.15. So those are some of our interest nodes that we want to be looking at today. If you're looking bullish, kind of give the market the opportunity to move about 5 or 50 SPX handles. If you're looking in the SPY, it should be a similar thing. And that's where we'll switch over here to the SPX ETF. This particular product is pricing about a $5.6 expected move. The SPY closed about 384, and we have a little bit of a pre-market rally, slight gap up from yesterday's close. But what that does is it puts the same regions in focus. If the market slides lower, the S&P today has the capacity to move about $5.5. And from 385, we'll just kind of say we open somewhere around 385. That means we can go down to about 379.50. That 380, of course, being our high OI. But it's also true that even more significant open interest is much lower. 375 stands out as a higher node today, and the market certainly has the capacity to expand the expected move. Let's say there is a surprise today, the market could see a doubling, and that would be just on a daily basis. The 375 would be one of the clear targets if we were to see a really significant breakdown. Same thing to the top side. Is 390 heavy? Yes, relative to other nodes, the high OI stands out. But you'll notice, compared to the downside put premium, it's less elevated. Therefore, if the market does rally, it's going to need some fuel. You'll need additional volume to kind of, I would say, facilitate a move to the upside. But you still want to be thinking in a $5 increment. Because as far as the option market is concerned, that's what we're going to move today. That's likely our bounds in regards to back and forth trading. Now, you can do this in the NASDAQ as well. There's nothing really special about using the SPY versus the QQQ. The reason I don't really use the NDX too often to kind of compare it to its particular index trading product is simply because it's not as heavily traded as the SPX. You'll notice, just yesterday, this thing only traded about 15,000 calls and puts. And you compare that with the SPX, this thing traded 2.5 million. So you can't really compare those two indices, even though the NDX is an $11,000, $12,000 product. The numbers just don't kind of match up the same unless you're doing some ratio comparison between, the price differentiation. But if you wanted to look at something like the NDX as well, or even something as simple as the NASDAQ futures, these future markets, whichever one you decide to choose, do have some participation. And, taking those lower option interest into account, you can get a sense of how far the NASDAQ, for example, can move. Or you can just keep it simple. If you're not trading NASDAQ futures, nor using something like the NDX to kind of model quantitative values, you can just look at the QQQ. It trades plenty of option interest, and similar to the SPY, it has about a $5 expected move today. So, from a 288, 289 close, you want to be thinking in $5 increments. That's what we're likely to move today. Similar to the SPY, the $10 nodes stand out, but we're not really seeing like a high deviation of open interest at 285, nor are we seeing it at 295. This one is probably double, comparative to the other nodes. So it's a target. If anything, if the market moves in one direction, I would certainly look to try and get a position as close to about a $5 target. But remember, we're starting from yesterday's close. And this is really what the option market is trying to model each and every day, is how wide can we go today? You'll notice things like yesterday, the market had a bit of symmetry in regards to how it moved. And that's what an option market tries to model before it happens. let me bring up like a 5-minute here. You'll notice that most of the trade was centralized around the open. And we saw a slight decline in the S&P. The NASDAQ was actually pretty choppy and flat. Let me get my, I'm trying to get my pen up. It takes a few minutes. There it is. So you could model, let's say this is kind of your mid-range. The market was able to move about $2 to the top side. And then remember, just because we moved up here doesn't mean we're going to continue going. We collapsed back into the middle, and then we moved, in this case, about $3 to the downside, a little bit more precipitous downside, but then we just came right back up. So this reflective kind of trade, you know, it doesn't always happen this way, and nor is it as easy as we're trying to kind of make it here. But yesterday was a good example of how those upper and lower bounds can be modeled a little bit early, and you can know where some of the risk in the market lies. The S&P had about a $3 expected move on yesterday's session. That's more using the SPX, which does have a Tuesday expiration. Okay, so option value aside, what is our game plan today? So I was looking back at some of the previous FOMC meetings this year. We've had, let's see, 5 so far this year, and they've all had characteristics about them. We kind of talk about it as the real FOMC reaction is on the next day, but coming into an intraday session, what should we expect? As we look at our rate probability, really nothing has changed. We're still highly probable to see a 75-point rate hike, but there is a slight probability, about 20%, that we're going to see 100 basis points. Nothing really has changed week to week. It's just been in the forefront of our probability since last CPI reading. So I've got the dates written here. And what I wanted to do was just kind of look through the intraday sessions on each of those days. Because if we're trying to model what to expect today, the only thing we can really use is previous FOMC trading sessions. And ideally, you want to keep it to close or previous sessions, ones that have some similar characteristics to what we're about to experience. So in order to do this, I'll have to kind of shift through a couple of custom date ranges, but we can go to January 26th. We'll start off there. Maybe let's do the 25th to the 28th. So we'll actually do the whole week. So let's do a whole week. And let's just look at this on a 5-minute period. So we're looking at the S&P on the week of FOMC and trying to get a sense of what the market looked like during that time. Hopefully this loads. Otherwise, half the presentation is gone. Interesting. Oh no. That's not good. Why aren't you loading? Let's see if I can make it a higher aggregation period. Maybe it's a little too much data. All right, let me see if that fixed it. No, so we're gonna have to go with something a little higher than, let's do hourly. I know that's a little wide relative, but so the day of FOMC in regards to this week was January 26th. So we're looking at the first one here. And if you recall, the S&P had made its all-time high. We were starting to slide back into a trend break. You know, we had lost the 50-day moving average. Market was taking a pretty precipitous fall. And on the Monday session, we actually marked a relative low. This 420.76 was a big impact low. You also want to remember how wide the volatility was back then. this from high to low is a 5% move, but it's the S&P going from 420 all the way to 444. So it's a lot of volatility even without FOMC engagement. But what sort of intraday session did we have? If we look closely, we can see that the market traded, at least for the first couple of hours, between about a $4 range. Then we, of course, got the actual news from them, and we were seeing rate hikes starting to take favor into these meetings. And the market took a downside turn. We went from 444 all the way kind of breaching the previous highs of the session. And then we, of course, sold off for the rest of the day into a low of 428, but we closed at 433. Now, let me see if I can get a slightly closer time frame here. If I can't, then I'll just let that be an exercise for another time. For some reason, the 5 minutes not loading. What about a 10-minute? Okay, so this is a 10-minute chart. It's kind of a weird one, but you can see the volatility here. This is what I'm trying to showcase. There was not much in the way of directional movement, and then all of a sudden we got our news, and of course the market chose a direction. If you're taking range breakdowns, that could have worked, but you also recognize that if your stop was at high of day, you might have gotten tagged out during this volatile session before seeing the actual move. So that's one example. It's our most historic example. It was a down session. What happened the next day? And that's really what's important here is this intraday session is one thing, but if the market continues or changes direction the next day, it can kind of counter your price-based bias. If the market is heading lower one session and then reverses the next, you kind of call into question the legitimacy of the rally or the sell-off on the previous sessions, the engulfing structure. So as far as this one's concerned, we actually traded somewhere between these bounds for most of the rest of the week. Obviously, it's a pretty wide area to consider, but most of the trade stayed within it. So it actually marked a volatile trading range that the S&P decided to continue to interact between. So that's our first example. Let's go to March 26th. I'll kind of accelerate a little bit here for time purposes. So March 26th, that can't be right. I must have marked March 16th, that's what it was. Wrong date, sorry. March 16th, so let's go to March 16th. We'll go the 14th all the way to the 18th. Let's do a 30-minute for now, like we could do an hourly. I guess that's where we started. Okay, so March 16th. Market was actually in the midst of a bounce rally. The market had actually put in a significant low, and this is coming off of some of the Russia-Ukraine conflict. We were seeing a strong counter rally relative to what the market was interpreting as a lot of risk incoming throughout the year. But the session in focus, of course, is this one. We're seeing pretty wide high and low trading, and this is of course on an hourly, but it's in the midst of an uptrend. So we did happen to continue our uptrend, and it was net a fairly bullish session, albeit no way could an intraday trader survive this type of volatility. So you probably have to initiate a new position just to take advantage of the secondary rally. You'd probably be stopped out on the first attempt, if you're anywhere in the morning session. And then as we bring this into a 5-minute, I shouldn't have done that. Do just the session itself. They'll just hopefully allow me to do that. Okay. So you can see, the type of rally, sell-off rally that we had on this session. But to this particular day, it was a little different. We actually saw some upside. There was an uptrend in the morning. We were able to trade sideways for a bit. Market sort of relinquished some of that risk going into the meeting. And then, of course, this is the start. This is when things kind of kick off. Now, what you'll notice here is that there was probably two trades. You could have taken something like a low of day break, and that, of course, is a fairly bearish setup. You can try and ride that as low as the market wants to go. And then, of course, if we maybe zoom out a bit, although I can't do it here, there probably was a significant area of support at about 425 because the market did an about face, sort of countered most of this move in a very quick 10-minute session, and then, of course, continued higher. So this is an example of what sort of volatility we can experience today. And remember, the S&P was a different monster back then. We were trading at 430. So 5% moves, or something akin to what we're looking at today, market going from, let's say, 385 to 390 and 380, those 5-point moves approximately, those are pretty volatile relative to the current price. Back then, that looked like about $5 or $6 of high to low trading. So similar price movements, but it actually was lower volatility relative to what we're expecting today. It's relative to the current price. Okay, so now let's go to some of the more closer ones. These are the ones that most people are modeling as what this week and what today could look like, because they're very similar in their response. Oh, and obviously, if you're looking at the reaction the next couple of days on the March session, it continued higher because we were in the midst of a melt-up rally. Okay, so now this is the one that most people think could be a high opportunity event. And this is what we've seen for two of the most recent FOMC reactions. Once again, remember, we have some context as to what's happening into the meeting. This is a very mild uptrend with a little bit of a shakeout here occurring on Monday. You can tell just how significant this hourly session was compared to the sell-off. But coming into that Wednesday, this is your 4th of May FOMC, you want to look at the volatility of the session. And even more importantly, look at where this move started. It actually started at the range lows. If you're marking sort of your high and lows on the day, there appeared to be a bit of a spike here down to this level. But then, of course, we started breaking out. And here, we can sort of anticipate the idea that if we continue to have bullish FOMC reactions, we might be looking not necessarily for support areas, albeit that's going to be important to set up, but instead we might be looking for breakouts. If there is sort of a bearish bias into this particular FOMC and the price activity goes above high of day and pre-market high especially, we might want to participate in that side of the trade for as long as possible. Obviously this one continued with no real significant pullback. And as we kind of drill into the short term, we can kind of look at that. But really, what's important is the next day. The next day, a lot of people were surprised because unfortunately, we gave all of this rally back. And this is where the real FOMC reaction comes from. It's the idea that the market may digest this on the following session. And this is really the true reaction. Now, if you recall, in May, this actually was a relative top. We didn't really clear these highs since they were set by the FOMC. I don't think there ever really was a breach for quite a while. So this is also about 430. This is about where the most recent rallies have stalled, near the 200-day moving average. So those things are important. And for your short term, you definitely want to be looking at that type of volatility. Start putting together an idea of how are you going to trade this? Because here is prior to the press conference, and here is the press conference. So do you want to be involved maybe with some of the high to low trading if we don't have a clear breakout in either direction? It really doesn't matter which one. Or do you want to maybe wait for the actual ignition, getting out of this choppy area and hopefully going for something much more significant? Obviously options will help with that, just to survive that volatility. So last but not least, let's go really quickly to June 15th. And I'll just kind of briefly cover these since we're running a bit low on time here. But June 15th, same idea, start marking how the intraday moved prior to this particular announcement. And then of course the following day, this one unfortunately didn't even give you the intraday. This was a gap down open. So we actually opened on the collapse. And that of course was net bearish, leaving a lot of people kind of thinking more upside due to the session, but then of course it collapsed on itself. And then finally, our most recent one, this is our July 27th session. So we'll go to July 27th, the week of July 27th. I'm gonna do a 30-minute. It gives a little bit more data. And it's of course this one here. So what you'll notice is, at least over the past couple of FOMCs, there's been a bit of a bullish lean on the intraday, but 2 out of 3 have collapsed. Our most recent one didn't. In fact, we continued the rally. We really never lost the low end of that sort of particular event. And breaking the high end might have, once again, been a bit of a counter move relative to previous examples. If you're a bear and you're saying, no, this FOMC is going to collapse and go back down, well, where do those bears stop out? They probably stop out at the highs, because if it isn't happening, they have to get out. They're wrong, and they kind of fuel the next leg of the rally. So be thinking about wide ranges first and foremost. Secondly, look at the opportunity on the short-term intraday session relative to the FOMC. You might not even take a trade until later today. And then last but not least, think about how you're going to position into today's activity. You might be fortunate enough to be holding a position in the morning. Let's say it's a long session. There's a bit of an uptrend. You might have started a position somewhere in the morning, and really you're carrying a break-even stop. You might have taken profit during lunch and things kind of go sideways. And then if you're lucky, I kind of call it luck here because we don't know how wide the volatility is going to be, set a break-even stop. At that point, you might get that last move, and really you don't have to do anything. Or you can try and add to an existing position. So use options as best as possible to kind of tamper the volatility. And obviously, these are just model examples. They're historical, but it shows what's possible today. It shows the potential. So with all that said, best of luck today. Trade safe. Remember that there's going to be 2 different sessions today to kind of worry about. And obviously, we'll look at some of the opportunity tomorrow. So take care. Stay tuned for pre-market prep, and we'll talk more then.
Good morning, everyone. Hopefully you can hear me out there. Let me just check.
Yes, you're good.
Excellent. Perfect. Well, good morning, everybody. And good morning, Norm. How are you?
Good morning. I'm all right. My computer, on the other hand, I'm running behind. As you know, as you've been doing this for a while, it always throws a wrench into the gears when you have an update on your system overnight you weren't expecting. And so I fiddled with my camera. I'm running a little bit behind, but if I'm gonna pick a day to run behind, it's gonna be a big Fed day where I'm not anticipating a whole bunch of craziness in the morning anyway. So yeah. Anyway, sorry.
Well, we can
I have
see
no
that.
camera.
Yeah, I noticed that with the big black screen. Well, it's Murphy's Law. I guess that's the way it goes. So, like you said, could be worse. Today is, well, as Jared was just outlining, if you were with us for Engineering the Markets, this is sort of a day and wait, but the day is finally here, and we'll see what we get this afternoon. As you can see, by zooming in on the gappers list here, there's really not much moving. We don't have a lot of gappers, so that should be pretty quick to go through some of the tickers. In fact, I recognize from the last few days of things that are just sort of hanging around and playing around here. So I think that might be pretty quick for us. As Jared was pointing out, if we look overall in the markets here, we're sitting at sort of a level where we've stabilized over the last few days, but because
Your gain
everybody's
is
been waiting.
exceptionally loud, Peter.
Is it? I like being loud.
No.
I'm not sure what's different today to other days, but hold on a sec. Let's see if we can.
I don't know. I haven't seen any news coming in the last couple of minutes. We've had no data expected at our normal 8:30 time. I also hear a little bit of an echo of myself in there.
Let's see. We'll turn the gain down. See if that's any better.
That might be a little low.
Okay. Turn it up. Haha.
There we go. That's probably that's the happy medium right there, buddy. Okay, good. I'm the only one that has the echo. It's a little annoying to me, but that's fine. So no, we don't have any data this morning. The first piece of data we have out today is at 10 a.m. That is existing home sales. Everybody knows the housing market's slowing as rates rise. The big one is this, and this hadn't been updated because like I said, I'm running behind. So ignore those. The economic calendar on the screen. The big time today is FOMC rate policy announcement after their 2-day meeting. Always occurs 2 p.m. Eastern time, followed by that's the announcement, the readout of the press release, and then at 2:30 is the press conference with Jay Powell. So 2:30, yeah. So anyway.
And as Jared was pointing out, we can expect some market volatility at that point. Usually we get bounces. The question is, which direction will it bounce, and then what does that recovery look like?
How quickly will it reverse? Because a lot of times it does. A lot of times it had fakes. But, I anticipate if we have anything going on this morning, we'll have maybe a little bit of early morning session going on, and then we'll probably just be kind of garbage until that 2:00.
That is probably a good guess. That's usually what these days look like. So with that, we are here on the Wednesday. Let's take a look. So yesterday we were looking at a couple of tickers. I said I was going to be watching a few things, including mRNA, which frankly, and let's go back to yesterday here. Just take a peek. Didn't end up doing much of anything, so that was a bust. What surprised me personally was that Ford was great for me off the open. I didn't think I was actually going to end up trading it, but I took what we call our Rising Devil trade here in the room, which is a documented strategy, if you will. And I got a great drop off the open, came back, and why does this not look right? This is not the right day. It's not what it looked like yesterday. That's what it looked like yesterday. Unfortunately, I made a key mistake and got myself stopped out at the VWAP. Otherwise, I could have ridden this thing all day. This could have been an all-day trade, but still was a great one for me. So while Ford, like we were saying, doesn't move much, but if you get in at the right place with the right trade management, you can take advantage of it. BYND, we were watching just for the fun of it to see what happened, and it just sort of slowly sold off all day. I'm not sure, Norm, did you take that out of spite? Take it in anger?
No.
No. That was pretty...
No, but I did see that they suspended the COO for his actions. That's the craziest story I've heard. What college was it at? Do you know? Does anybody know?
Tennessee? Something like that?
Okay.
You do Tennessee? I'm guessing there. I don't remember. If anybody knows. Arkansas?
Arkansas.
Oh, there you go.
Oh, ho, 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 ho.
Okay. All right.
That's home of Tyson Foods there.
Oh, they were talking. He used to work for Tyson Foods, so they were talking about that. They made a big point in the article of mentioning how he was the head of the executive safety committee. He was probably head of like 50 committees. That's what happens when you're in those types of roles. But they of course pointed that one out because I guess they loved the irony of that. But anyways, all right. Well,
there's a lot of irony in that story. Not like Tyson Foods. Oh.
There is. There is. All right. One of the other ones we were saying to watch yesterday was PayPal, and it actually made a couple of good moves.
My family probably will know him. My family's really tied in at Arkansas, so I would imagine, and actually knew Don Tyson. But I wouldn't be surprised if they know him. Anyway.
Probably. Well, maybe they can help put up bail. So.
Anyway, on to the next.
Yeah, indeed. PayPal was one of the other ones that we were looking at in the pre-market yesterday, and it made some good moves throughout the day, so some good trading opportunities. So let's clear this list. We'll start anew this morning, and I'll add a couple more rows in here. I always forget how to do the magic hotkey space underscore backspace. Anyways, whatever, to add lines. So I do it manually. All right, there you go. And let's see what we've got. So on our gappers list today, starting with what's gapping up, we've got something called HKD, AMTD Digital Inc. It sounds like a Chinese stock.
This is that Chinese stock that IPO'd and went from under 100 to what, 2,500?
Oh, look at it right here.
Over the course of a couple of days. Yeah, and it was all a mystery and crazy, and it's dropped way back down. So big move today. I'm not seeing any news. I mean, this thing traded extremely thin, and with a huge spread when it did that. So terrifying, really. Be very careful. I wouldn't even touch this. So
I think we had one member in the room that made some crazy trade and was holding on to a half dozen shares or something. But a half dozen shares when it goes up $1,000 can. It can certainly make your month.
Not chump change.
Anyways, but it carries equivalent risk because look how much it dropped. It dropped $1,000 the next day. So you gotta, this thing is crazy. I wouldn't go near it if it's the type of stock that interests you. Maybe today's your day, but not something I'll be watching. All right, moving on. SYRS does not look good pre-market. 450,000 shares though, so good volume. Syros Pharmaceutical up. What is it up? Well, it's only up 4% though. Is this a buyout?
This one was, I believe it was, or it's a merger. Okay. It's a closing of a merger. I can't remember if they're the acquirer or the acquiree. They are acquiring a different one. This is a biotech. It was in play a few days ago. Yeah. Not great.
And I was able to guess that just based on the price action. It's sort of you can tell right here it had jumped up and then sort of flatlined, right? So there's not much happening. So that was pretty obvious. And this, again, not one I'm looking to put on my list. FREY. I think we even looked at this yesterday. Did we? Sounds familiar. Anyways.
I can't remember if we did or not.
I don't know. Anyways, 340,000 shares. It's up 6%. Still not exciting.
Yeah. That, I'm not seeing
Agreed.
anything.
Not excited. All right,
I have
moving on.
nothing to. I have nothing to add.
All right. And Mara is on here. Marathon Digital likes to jump up here every once in a while. So tells me Bitcoin's doing something. But being that the others aren't on the list, again, 2% or 1.8% as we sit now, yeah, not that much to get excited about. Okay, so far, nothing on the gap up list. Let's look on the gap down. Leading the pack is Beacon again. But let's go back and take a look at yesterday. Price action yesterday, largely down. We had a little bit of a spike at the open and then sort of down to flat. Today we do have shares for short. I don't think we had anything for short yesterday. If I click on it, you can see that we have, well, according to DAS, if you trade on that platform, they have 10,000 shares for short right now. But I'm not interested in touching it. So moving on, SHPH. My God, what is with all these crappy stuff? You know what this shows? This really shows that the whole market is largely waiting, right? Like we talked about, it's all waiting for FOMC. Nothing is moving, waiting for that. We only have some of these sort of marginal, I'll call them offerings, that are making a couple of moves. So not surprising. But anyways, SHPH. Shuttle Pharmaceutical down 5% on 189,000 shares. Do they have a failed drug or something? Failed.
I don't. They had a manufacturing agreement that was announced yesterday. I don't see anything exciting about this, but I didn't, admittedly, look into it too deeply.
Okay. Well, look, based on the pre-market, still not exciting. This is another one of these, like everything we've looked at so far, guys. Personally, I would just wait to see if they pop up on scanners or, if the members in our room, because we always have people that are scanning the market. If somebody starts to mention it's moving, then I'd worry about it. Otherwise, this is not giving me a trade I would take off the open, or nothing that particularly I want to take my time watching, to be honest. Okay, moving on. Bluebird Bio. Now, they've been on the list occasionally. Once again, 200,000 shares, down 3.9%. Pre-market looks terrible. Don't like it. Don't even bother looking at it. I don't care. All right, Sun Run Inc. I think this has been on the list at some point in the past. 119,000 shares.
Times when the solar's been popping.
Yeah, blah. Same story. All right, look, something that's worth maybe talking about. MU. Now, MU has, it used to be a great mover, but usually when MU is moving, other parts of the semiconductor industry are moving as well. You all know that I like to watch AMD. That would be my preference. I don't know why MU is down, but it's down just 2.2% here on 200,000 shares, more than it normally gets pre-market. But Norm, unless there's some like news.
Well, it got 2 downgrades this morning, and I wanted to talk about it because it got 2 downgrades. Stiefel, actually, I guess Stiefel initiated it. I don't know if they had a rating previously. I don't see it. And then they got a downgrade out of Mizuho. Both to, hold rating Stiefel, neutral Mizuho, which is the same thing. Usually there's different analysts call them different things. And the Mizuho price target moved to $56 from 75. Stiefel to 56, and Stiefel initiated at 56. So the reason I wanted to talk about this, I don't usually dig this deep into analyst actions. Somebody said they got a double downgrade. That is not the same thing. This is 2 downgrades. A double downgrade is when a firm has, for instance, a buy rating. Usually there's buy, hold, sell. And buy would be their a buy rating, obviously. A double downgrade is if the same firm moved that buy rating to a sell rating. So think down 2 gears in a car. That's what that is.
Okay, so we got two different analysts in this case downgrading it 1 gear.
Yep.
So, All right. Well, look, maybe that's enough to move MU on a day like this. It actually has been holding up relatively well compared to something like AMD and Nvidia, only because it doesn't move as much. So, but it is at the bottom of the range on the daily. It's in an interesting spot. If it can break out the bottom because of these downgrades, we might see some further downward action on it. So, look, might as well put it on the list because it is currently the only thing on the list. All right, what else have you got? If anybody out there in YouTube land has
Apple.
anything for me to watch, throw it out. Apple. Apple is
Yeah. The
usually
reason I bring up Apple is because it swam upstream yesterday.
okay.
The market was dropping. Yeah, I mean, it wasn't a massive down day, but it was a pretty decent down day. Apple was rising, so might be something interesting to keep an eye on.
Yeah, and Apple moved fairly well yesterday. I think I got there was one trade that I missed because I had such a great trade on the open. I missed, but Apple had a great move. Let me just go back here and I'll show you because I talk all the time how sometimes the best moves don't necessarily happen at the open, or you can at least get other opportunities throughout the day. Apple here, at the open was a great riser. And if you caught that, you had what was the best move of the day, to be honest, right off the open here. And it gave you a couple, let me zoom in for you, gave you a couple of opportunities, right? Clear bounces off the VWAP, came up, bounced off of it again, and it continued to move up. So if you played that, great trading opportunity. So even though Apple was not in play per se, it was a steady mover. What I was watching was Apple at the high of day, and to me it made a very clear signal of reversal here. We talk about level 2 all the time. Our good buddy Thor, sort of the master of cam pivot points and volume price action. And this clearly gave me some volume price indication that this break of 58, it had a big order share here. It broke it, but then showed no desire to go further. I was kicking myself because I was literally sitting here with my finger on the sell button at 58, like 04, 4 cents off the high of day, and I hesitated because I thought, I've had a great day. Let's not ruin it. But then it made a great move down. So point being, be patient and don't be afraid to take your shot when you see something set up against your strategy. That may not be at the open. It may not be all day, but you're better off to wait for that to happen, especially in the last couple of days and today when, as we said on the outset, right, this is a day where everybody's sort of waiting to see what's going to happen with the FOMC, and which means that moves probably aren't going to have a lot of sustainment in their direction. So you've got to be careful in what you're choosing to take advantage of. But Norm, you're right. Apple looks great. And in the room, someone else was mentioning Tesla. Tesla, doesn't look bad pre-market. 600,000 shares, moving up here again. It's held 300 over the last couple of days quite nicely. Yesterday wasn't a big day for Tesla, but it had a couple of moves today. Yeah, you know what? If anything is going to move on a day like today, it could very well be Tesla. So, maybe what we do is we stick with, whatever your standard stocks are, maybe that's what you stick with here for the morning. For me, that would be Apple and AMD. And of course, yeah, I'm happy to look at Tesla. What else have you guys got? I got a lot of people putting in Tesla. We've already looked at. How about Netflix? It was moving a few days ago. I didn't look at it at all yesterday, to be honest, or Monday for that matter. I don't see anything particular about Netflix this morning. Really low volume, not much of a move. So, maybe, sure, it could, but I don't see any indication of that right now. What else? Oxy, I see somebody mentioning. That's been actually pretty good to watch no matter what it does pre-market. Oxy is given some opportunity throughout the days. Yesterday, sort of closed where it opened, so it didn't actually, sort of do much. But there were a couple of little movements in between. Pre-market, again, nothing happening right now. Man, now you guys are coming up with all sorts of things. Let's see. CCL, yeah, it's a good pre-market volume, although the pre-market action doesn't look great. So we got a couple of what I'm guessing would be sort of institutional or bulk orders. You can see we've got this pre-market settlement amount here, right? Remember this candle I was talking about the other day, right? We love to call it the tinfoil line. Big wicks, little body, large volume, right? Very typical right at 8 o'clock. So CCL is showing that. And look how it brackets this range here pre-market from where it was holding here to where it's holding up here. So yeah, CCL might be a possibility. Again, maybe not above anything else, but there it is. Roku is another one people are mentioning. Yeah, not much going on pre-market with Roku. And last one I'll look at here that I'm seeing off of our room, Pixie. Somebody said, wow. What's the wow? I'm not seeing much wow on Pixie. So, okay.
Wow.
That's what we got. Okay, going to YouTube. Somebody's mentioning XPEV. Why not? Let's take a look at XPEV quickly. It's moving a little bit. Yeah, we've it's funny. The I mentioned this the other day, and it's worth mentioning again that if anything tends to generally ignore the FOMC and the U.S. Changes in interest rates, it's the Chinese stocks. There's a lower impact on them as a result. So, XPEV would fall into that bucket of something that maybe you could watch. It might move despite everything else that's happening in the market. So, yeah, maybe that's worth doing, and we can put it on here. I've got nothing else on my list, so why not? Just throw it in there. All right, with that, maybe some more stuff will pop up as we get closer to the open. So why don't we take a look at our community announcements and events, and we will tell you what's happening for the rest of this week here at Bearable Traders, and come back to our list in a second.
If you ever want to see what we got going on for the next couple of weeks, go to bearabletraders.com/webinars or click webinars in the nav bar at the top of the screen. Onboarding and technology every Monday night, 8 p.m. Eastern with Carlos and Mike. Mike will be heading that up as Carlos is in the Dominican for the next little bit. And then trade book. So strategy is for Tuesdays. Next Tuesday, 8 p.m. Eastern, is Andrew talking about, that's kind of like how he got it. It's the all around condensed version of Andrew's trading. It is not focused on one specific thing, but just his overall trading. Then tonight, Wednesday, psychology. You've got Mike talking about analyzing your psychology journal, 8 p.m. Eastern. And then Randy Howell next week, 8 p.m. Eastern, emotional self-mastery of the trading mind under stress. Very important, talking about stress and anxiety and trading. All right, Thursdays for mentorship, 11 a.m. with John, 4 p.m. with Ed. Man, I can't wait for earnings season and Ed to be able to trade again in the after hours, some decent stuff. Thor at 8 p.m. Don't forget about stocktradingsimulator.com, our free web-based replay simulator, where you can hone your trading skills 7 days a week, 24 hours a day. And then also tradingterminal.com. We're adding a ton of new features. They're coming out constantly, so be sure to check out tradingterminal.com as well. If you're looking to try out the room, you haven't been in it, you get a trial membership, an intro membership, no obligation, 7 days, 7 calendar days, 5 trading days in the room. Use the promo code PreMarket24 to get a discount off that. It is a 1-week trial. It is one-time charge. It does not recur. And then if you would like to join the room and get elite membership and access to all the webinars and mentorship, use the promo code READ50 to get a half off the elite annual membership and a one-on-one coaching session with Dr. Kenneth Reed.
Fantastic, Norm. Thank you. Okay, well, we've got some time this morning. Our list was so light that gives us a little time to set some levels. So let's take a moment. Let's have a little chat.
There's some people here saying that people have lost audio in the room. I don't. Can anybody hear us?
Lost.
I can hear me echoing, but yep. So a good chunk of the room can hear us. If you've lost, it's not going to help. Maybe one of you guys can tell them to reconnect the audio or refresh the room, and that'll fix. But anyway.
So quickly, I just want to have a little chat with everybody. If you're trading today, if you're day trading and you don't have a lot of experience, these are exciting days because the FOMC comes out, the minutes come out at 2, the press conference starts at 2:30, and the market almost guaranteed is going to go nuts. The problem is we don't know in which direction, right? It depends on how the computers read the minutes at 2 o'clock and how they then interpret that and react with their automatic trading. So all I would want to recommend to everybody, right? If you're waiting for that moment, that's great. Let's be here at 2. Let's watch the markets. Do not try and guess the way it's going. I've heard too many stories of people that just get slammed because you guess wrong, and it moves fast and hard. So whether you choose to trade the indices or an ETF, or you pick a stock to trade as a proxy for the market, like Apple, for example, which usually moves in sort of parallel and concert with that, wait to see the move and to decide how you're going to play it, or have decided in advance how you're going to play it once the move occurs. Don't guess, because if you guess, you could get hit harder than you expect. Now, it could go in your favor, and if so, lucky you. But it's not worth the risk, right? Risk management is what it's all about. So let's please practice that as we go through our trading today. All right, so let's set some levels on a couple of things. There you go, exactly. That's the dad talk. So let's go back and set some levels on the couple things that we've got. Like I mentioned, MU, I love it breaking out of the bottom end of the range here. You can see on the daily, we're heading below where it's been. Even the June lows, we're down below that, and we're heading lower. So let me zoom way out here, and I've got to go back to, 2020, which is not even last year, before I find some levels down here where it might provide some support. So 46.50, definitely want to keep an eye on it there. It definitely was an area where it had some support. So if it gets that low, another $3, that would be a huge move for MU, but I suppose it's possible. Other than that, I'm not seeing anything of particular relevance in between here. There was a gap way up here. Let me put one, why not? 48.60-ish. This would have been early 2020, so right when the main pandemic activity was happening. So I'm going to put a marker in that. But other than that, I think we just watch and see if MU breaks free of this area that it's in. We could see some downward motion once the market opens here today. XPEV was the other one that people mentioned that I sort of like the look of pre-market, and on the daily, this is almost a different story. We're actually moving to the top of this range. As you can see, I've got a lot of lines all in the same spot here. These are the highs and lows of the previous 2 days. So yesterday's high is certainly a place to watch at $16.44. I see that we've got $16.64, just 20 cents above that. Let me set this at $16.64. That would be a place to watch if and when we get up there, to see if that provides resistance to its upward motion. If not, we have a good chance of going up here a couple of dollars. So I think I'm just going to wait and see what happens after that. Let's go to the old standbys. You can see I've got some levels that, frankly, I am not going to change because they're set and they're well done. So, down below the price, up above the current price. You can see them on my chart here, all marked in yellow. So those are the levels, $60.17, $62.58. I still like those as daily levels. I will go up to my 1 minute chart and mark the settlement range here in yellow like I do. Our tinfoil line on Apple could be in play and relevant today. So that's what I've got setting ranges on Apple. AMD, also have my levels set. It's funny because AMD's, look how flat this daily is. Normally, if I looked at a daily chart, I'd say, not that great. But I know it moves intraday, so I know it's worth watching. So I'm going to put my settlement range markers here. I just want to make sure at the right place. Yeah, 75.52 on the low, 75.47 on the high, and that's good to go for me for AMD. All right, Tesla, top of this range. It would be pretty exciting if it got up here to 314, test this 315. Look at this, 314.67 was the high here. 314.67. If it gets up to that level, that could be some interest as it busts out the top. If anything could do it, Tesla could do it, because it tends to just, it does its thing. It moves when it wants to, and you never know which day that's going to be. So, hey, you know what? Saying that makes me think, I haven't checked in on our meme stocks recently. GME, yep, doing nothing. AMC, also doing nothing. Are we out of memes? Is the meme season over? It looks like it. Not much going on there. All right, well, going back to the market indices with the SPY and the Qs, we're slightly green here today, and I don't know what to expect, to be honest. I think we're going to drop at the open, but I don't know by how much. I mean, we are trending up here. I could be wrong. We can shoot up. You know what? I'm just going to wait and see. Right now, the way I'm seeing the market, I don't have any set trades. I don't have anything off the open. Like yesterday, I had Ford, which was setting up for a rising devil. Today, I don't know, which means I'm probably going to be waiting until at least 20 minutes after the open just to see which way things settle in before we get to the afternoon FOMC. And if that yields an opportunity, wonderful. If it doesn't, I may just be sitting on my hands until the afternoon trade arrives. So we'll see how that plays out. All right, I'm going to go back. We're early. It's barely 9 o'clock. So I don't have a lot to look at. Peloton. Ugh. Well, it's certainly not moving pre-market. And even the daily has sort of been in a range here. But, I see Jared mentioning GME had some swing opportunities after the FOMC meeting, right? The whole story changes because it depends on what the news is. If it comes out as expected, but even that right now, I'm seeing uncertainty because the expectations are changing. Different articles and different analysts are, sort of predicting different numbers here out of the FOMC. So, who knows, right? What we're going to get? How many basis points are they going to move it, and how is the market going to interpret that information? I guess we can only wait and see. Ones that can be good to watch on these days. I mentioned this yesterday with PayPal and Square. I still think that they are good movers that we could potentially watch. They tend to move well on the mornings before FOMC. So far, I'm not seeing anything on PayPal and Square. Yeah, like they're not, there's no sign of it so far. So, whether it happens today or not, we'll see. And that's it. We may be done early today. Let's take a look at what our moderators are taking a look at. And as we said, might not be much yet because we're a little early. I don't have a lot of them that have come in yet. In fact, so far, I only see my good buddy Thor. Thor has put SPY and Qs, right? Smart move. He's going to watch the market indices overall, and then he's going to take a look at Microsoft and MU. So let's take a look at that. Microsoft is one that I didn't look at amongst all of them. It is also a good proxy for the market, especially when on days like this when these moves happen. Whoa. My charts were going crazy there. Microsoft is down near the bottom of the range, but it looks like it had some stability over the last couple of days. Yeah, no sign of it moving so far today, but it could very well become a mover once the market opens. So, that's it. That's it, kids. That's all we got. Let me take a look at the gappers. Well, other than Peloton, which jumped up on the gap up list, I'm not really seeing much else that's up here. So, quiet. All quiet on the Western Front as we head towards this FOMC meeting and the Powell press conference, which I remember last press conference, it made me laugh so much because the market moved. He took the microphone and I swear to you said, "Good morning," and the market went crazy. Like he didn't even say anything yet. So, or good afternoon, I suppose in that case. And it just makes me laugh because it's almost like it doesn't matter what the words are. As soon as he takes the microphone, the market's like, "Nope, got to sell things." Off we go. So, all right. Somebody's asking me about chart configuration. What time frame do I use? I don't know that there is a time frame on them. I guess I use a 1 day period if that's the time frame you're asking about. So I'm not sure why we've got some people that can't hear in the chat room. Others can hear, I suppose. Yeah, something's happening. You need to reconnect. Because, yeah, others can still hear. All right, just making sure. We are going okay. All right, everybody. Well, thank you so much for attending. If you're on YouTube, we're going to cut off early because, again, it's all about the wait for the FOMC. Might as well give you more time to prepare or do other things. When the bell rings at 9:30, don't be in a rush to jump in and take just the first thing that you see, right? If you have a trade that you're waiting for at the open and you're a momentum-based player or a opening range breakout type player, then take it if you see it. If you don't be afraid to sit back, wait for your opportunity. I am a big proponent, like I think I was talking about yesterday, the crocodile at the watering hole, right? I will wait for the opportunity to come to me, and I will only take it when that happens. So with that, trade safe. Be very careful out there in the markets today. Hopefully we'll have some excitement this afternoon, some good profit opportunities. We will be back here tomorrow morning. We can compare notes and see how it went for you. So with that, have a great day, everybody, and we will talk to you on YouTube tomorrow. We'll talk to you in the room in just a minute. Later, everyone.